Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 28th of September 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of. And it's been a very interesting 24 hours in the global foreign exchange markets with significant moves for major currencies and the US dollar. You can see here a pushback from the dollar against the euro, the pound sterling, the Australian and New Zealand dollars, and dollar index itself rallying very strongly, up by 0.88%, the best part of 1% to trade back above 95.02 trading shortly before we recorded the video, in what really I suppose we could call a delayed reaction to the US Federal Reserve raising interest rates and some promising US economic data as well seen yesterday. Okay, taking that in then, let's move on and take a look at what's on the calendar today, events that may move the markets further. And it's a pretty busy calendar today with some medium and high impact data scattered across the 12 hours or so of the trading day here in London. And so we kick off at 6:45 with consumer price index data out of September for France, and that'll be followed at 7 a.m. GMT by leading indicators from Switzerland for the month of September as well. And then at 7:55 GMT, just before 8 o'clock, we will have unemployment rate out of Germany for the month of September. And then at 8:30 we will have gross domestic product data, the final read for Q2 data out of the UK. At 9 a.m. GMT, we will have CPI data for September from the whole of the Eurozone. And then we take a break until 12:30 when we switch over the Atlantic for a raft of core personal consumption data and personal spending data out of the USA for the month of August. At 12:30 as well, we shall also have the release of Canadian gross domestic product data for the month of July. And then we start with the first of the day's central bank speeches at 12:35. The ECB's Peter Priet will be speaking, and he'll be followed on to the lectern at 13:20 by the Bank of England MPC member Mr. Ramsden. At 13:45 we shall have the Chicago Purchasing Managers Index data out of the USA for September, and then to round proceedings off at 1700 the influential Baker Hughes oil rig count, the tally of active drilling rigs in the USA over the preceding week. Right then, breaking news and comment that's caught my eye overnight. Firstly, Japanese industrial production dipped below forecast in August, latest data reveals, but it also showed that retail sales had posted their biggest rise in the country for 8 months. So mixed data out of Japan, probably broadly more positive than negative, I would suggest. Gold prices have fallen to a 4-week low as the US dollar rallied, as we just saw, and as I said earlier, that rally in the dollar really a delayed reaction to the Fed moves and strong macro data yesterday from the US, including GDP. And finally, Italy's budget proposals have put the coalition government there on a crash course with Brussels and have spooked euro bulls, and we saw the net result of that, the dollar strength and unsettled euro investors, sharp fall in euro dollar yesterday. Okay, food for thought then, something to take away with you into the trading day and beyond. Why not think about this? There is much uncertainty over Brexit and what it will actually mean for the UK economy. But with just 6 months to go until the notional leaving date, new data from Reuters shows that only 630 financial services jobs have been relocated out of London thus far. Far lower than prior forecasts. And of course, the forecasts were for several thousand jobs to be moving away from London, and for many of those to be relocated to Frankfurt. The chart here from Reuters shows how those forecasts have been moderated, and the regional split of where those jobs, if any, leaving the UK are likely to end up. So quite an interesting report from Reuters, and they surveyed 134 banks, asset managers, insurers, rating agencies and exchanges employing more than 480,000 people in Britain when they conducted this data. So they're talking to the people who have got the jobs to potentially move. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And please do take a moment to read this risk warning thoroughly. Thank you for your time.